All right, folks, welcome to Afternoon Market Action. My name is Glenn.
My name is Ryan.
And we're on investing.com right now to see what happens with the decision. Hopefully everybody can hear you. That's right. No.
Did you guys drop an alert today?
Yeah, I did. 50 basis. Somebody just said 50 basis. I don't see it yet. Did somebody just say 50?
I was really hoping on the quarter.
I was hoping on nothing.
NVIDIA flying.
I'm in, and let me refresh this. I specifically came to this site just so that I could see the number when it pops up. And
it jumped up quite a bit.
All right. Anyway, 50 market will go down. I'm thinking that the 50 for me, the 50 was going to show some panic. I think that but I don't see it. Somebody said it. I don't see it. Dag nabbit. It was supposed to be. Go ahead, Ryan. Check. Everybody's putting in 50.
That's what I'm doing now.
All right, but this is where it's supposed to show up right here on investing.com. That sucks. I specifically wanted Joey to open up to this page for that reason. All right, and there it is. 5 there. Okay, we got it. I really didn't want any cut. I really was hoping that he was going to just cut everybody's legs out, but that would have been bad. But so it looks like it's a 50 basis cut. The cut could affect the yen. Yeah, if it is 50 yen increase in value. Hello, Glenn and Ryan.
The Bank of Japan makes their interest rate decision Friday.
All right, so please tell us what to do. I'm going to tell you to. Let's see what the software says.
And it jumped up, and now it's giving it back. A lot of it, at least.
I'm going to bring up the 7 software. Let's go to graphs, market timing, intraday, 5-minute bars, current day. Yeah, look at that jump right at the 2 o'clock. Big jump right at the 2 o'clock. I need to take off pre-market. All right. There it is. Holy smokes. I need to probably take it off a 5-minute. Intraday, 1-minute bars, current day. No, Ryan, it didn't come back down. That's on 1-minute bars, bro. That's the 2 o'clock hour.
Oh, sorry, I was looking at Apple.
Look at that.
Jumped up again.
Look at that.
Down.
Nice bump up, gapped up right after that at 201.
No selling pressure right now. Very little upper wick on that last candlestick.
Very true, and more follow through. So we'll keep our eyes on that. So there was the decision, 50 basis points. A lot of stocks. Now, just some insight. Ryan, I'm going to start off. Mm-hmm. My feeling about the 50 basis points is, honestly, I think that it screams panic. That, oh my gosh, we come too late to the party. We got to do this now. Blah blah blah. That's what the 50 feels to me. Wow, Luna up 50%.
I'm on the same boat. I was
thinking
thinking a quarter point would give the market assurance of a soft landing. A 50 basis point might essentially spook the markets a little bit of economic weakness. But I mean, either way, the market kind of anticipated an interest rate cut. And it looks happy to get one either way.
And look at that run. We're still moving. Someone in Congress, won't say their name, was saying that the Fed needed to do 75 basis cuts right now. And basis point, and I won't put a name out there, but I thought that was super crazy. So, right. And John, I'm with you. Be careful. The market can do the opposite of the initial move.
Correct.
I'm going to go back to the stories real quick, because there's something that I wanted to show you. A lot of the rate cut was in anticipation or help for mortgages. I want to show you something.
Joe, you should pin Jeff's comment.
Where is it? There it is. All right, what did Jeff say? Jeff said, Amir, what did Jeff say?
Glenn gonna be a Debbie Downer again.
Oh boy, whatever. So
buying VectorVest is all green.
After rate cuts, this is what happens: 3 months, 6 months, 1 year. All right. On average, this is from 1973. Not every single year, but after rate cuts from 1973. On average, first 3 months after the rate cut, market down 1.1 on average. Big years right here, 1973 down 10%, 74 down 14%, in 2001 down 16%. On average, though, 6 months after the cut, The S&P up 4.4%. 1 year after the first cut, 4.9%. I found this, and I wanted to show you what the anticipated result historically since 1973, after the Fed cut rates, what has historically happened. But on average, in the first 3 months, market down 1.1%. So which ones of these were election years?
2001 would have been.
2001? 2000 was the election year.
Oh, 2000. Okay, that's right.
2000 was the election year, then 2004, then 2008, right before the next, 2008, 2019, right before 2020.
So it looks like these interest rate cuts often occur right before a presidential election.
Interestingly enough, it seems like it does.
Yeah.
Do you still think we're going into a recession? My personal opinion is history shows that most likely we will, but we'll see. All right, so I was really thinking that we weren't going to get a cut. I really was. I was holding out for that, but came in at 50 basis points. We took a look at the market. Let's bring that back up real quick. There it is.
The whole misplaced of 818,000 jobs.
It was huge.
That didn't change your mind, Glenn. The Federal Reserve changed their tune real quick once that report came out.
My other part.
That's all I'm gonna say.
My other part of that is, I looked up what the average unemployment rate was just normally. It's sitting at about 5.5 to 5.8%. We're not there. And for the Fed to say that it was the jobs number that was the trigger, I don't believe that. I think more so than anything, it was mortgages. I think that a lot of people were feeling the effects of higher mortgage rates. Now, guess what? The interest rates get cut. Money becomes a little cheaper. People are going to flood the market to buy homes, which is going to be inflationary. Why? Because people want to get back in. People are going to start buying houses sight unseen and at higher prices to outbid everybody else. The inventory doesn't increase. All right, so all I'm saying is just keep that in mind.
Well, I have an article actually speaks on the mortgage demand with some retail stocks on my list today.
All right.
So I see some opportunities there.
I just think that out of the gate, 50 basis points says that the Fed knows something that we don't know, that the economy could be in more dire straits than he's letting on. That's my 2 cents. All right. First story we got, and remember, we're going to tune in to the 2:30 question and answer period. So we're going to go through our stuff real quick. iPhone 16 Pro Max has better battery life and great cameras, but Apple Intelligence hasn't arrived. That was huge for me in looking at Apple. The generative AI, but it ain't there. That sucks. So then I took that and matched it up with another story. Intel Lunar Lake CPUs deliver up to 30% more battery life, not than the phone, but then the M3 and M2 MacBooks, which is very interesting because these are like super fast chips from the people that I've talked to who are using them. And Intel, another story with Intel and Amazon did a deal yesterday. I did a video on that. I don't know if Intel is just trying to do whatever they can to be formidable in this space, but I don't know. I think in my mind it's a little too late, too much too late. All right, next story is yours.
Is it the Apple one? Go to the Apple story because it goes off your story.
Was that your? Was that your?
The predictions, the Motley Fool one in the middle.
Oh, there it is. Okay.
All right, so I went a different route. I mean, Apple obviously not a bad stock. Everyone knows about it. Pretty safe pick. But Intel does the x86 model, right, or x86 architecture. This article right here is focused on ARM. That's my baby. That company provides the architecture for smartphones, not just Apple, but Android. So as these, phone makers introduce AI intelligence to their, to their devices and really stir up some more consumer demand, there's going to be a winner in both of these spaces. That's ARM. Okay. ARM makes the architecture for both Google and Google and Apple. So after the iPhone 16 launch, I think ARM's the play. It's got a pretty small market cap. It's in a great space, great partnerships with all the big names. A little overvalued, obviously, a lot overvalued to the VectorVest metrics, but still a great stock.
All right.
And it's up today.
I'm going to bring up another one of my stories. This is going to be on my short list. Boeing and its largest union returned to the table with federal mediators after 30,000 workers walk out. Failed wage. And you know something? When the news came out that they were going to the table in the first place, Boeing jumped. After they striked it. What's the past tense? Struck? Yeah, after they struck. The stock got its ass kicked. So now I'm going to put Boeing just on general in my short list today. I'm actually going to start up on my short portfolio.
No, Jeff, I'm not on the Intel bandwagon. It's a dead horse.
Nope, I think he is. The
only reason I was on the Intel bandwagon was a hedge if something were to happen between China and Taiwan.
And
we're just not seeing that play out right now.
And it was a bad hedge. Intel is a bad hedge.
A horrible hedge. It's not a good company. I can't get behind it. I'm arm all the way on this play.
Yeah. That's true. All right, another Ryan story. Google wins court challenge to the EU's $1.7 billion antitrust fine over ad product.
All right. So Monday when I did the live stream covering Glenn, we talked about Google because I resorted the NASDAQ 100 list. One of the most undervalued stocks in the NASDAQ 100. It's on a discount right now, just broke above its downward trend line. And this is great news. And we're seeing the market respond, on a positive note when it comes to the interest rate decision. So as long as that plays out, it's giving back a little bit of ground right now. But Google's still a great pick, being undervalued in the hot space right now at the forefront of AI. So I'm a believer in it. And this whole antitrust, they've been in this lawsuit for a while now, and I'm glad this is behind them.
One good thing about if the market likes the 50 basis cut and the market moves up, growth stocks are going to be the place to go. Growth stocks and newly undervalued stocks that have been beaten up, like the SMCIs, all these stocks have been beaten up that became undervalued. Those are going to be the stocks to look at. So undervalued stocks with RVs above 1 are going to be your best pick if the market really, really, really does like what's going on. All right.
Yeah, Jeff, it's not in the fast lane, but we're starting to see at least the 3, 8, and 20-day EMAs start showing a bullish formation when it comes to Google. So, yeah, a little early on the trade. But, yeah, if you want more confirmation, Star Search, not a bad way.
Powell starts talking at 2:30, John. He starts talking at 2:30. All right, next one. Weekly mortgage. Is this yours or mine?
Yeah, that one's me.
Weekly mortgage demand surges 14% higher as interest rates hit 2-year low. Talk about it.
Well, this article came out today, so I'd be surprised if that number didn't even increase, or did it increase after this interest rate cut, 50 basis points. Glenn, I'm on board that this is going to put some pressure on inflation, but there are going to be some winners of this right now. Everyone needs, everyone's trying to save a buck getting a house right now. The prices aren't coming down too much, so this is really the only way to do it at the time is with this interest rate cut. So I see mortgage demand, and I've got two I'd never heard of these two companies. I went into the top real estate sector and just cherry picked two of the best companies I could find using the VectorVest 7 software. We'll talk about it when we get to the watch list. Great companies to have on your radar.
Corey says there are so many people wanting to buy a house, low inventory for sure. Yep, that's going to be the big problem from an inflationary standpoint. Is that house prices are going to rise because everybody and their mama is going to get into lower mortgage rates. Inventory is not going to increase, and house prices are going to rise. You like SMCI? Should we bet? No, I didn't say to buy it now. No, I would keep it on. If the market rises, SMCI may be at a point where it could be bottom fished. It's still at the bottom, and I ain't fishing for it yet. Hey,
Oscar says this looks like a political move at the end of his statement.
Yeah, I think that I
think it's ironic when we went through those dates of interest rate cuts.
Yep.
You notice how they were typically before a presidential election?
So for the most part.
For the most part, yeah. So, to see some kind of, we've even talked about this before, Glenn, the political motivation of getting an interest rate cut right before the election. I don't like to get too political, but looking at that chart, I do see historically where that has been the case.
Somebody said, why did I lower Powell's voice? Powell ain't on yet.
Well, he just lowered my voice.
He's not even on yet. He comes on in like 14 minutes and 45 seconds. He ain't on. What are you hearing, John? He says, I'm hearing, but it's very low. He ain't on.
Yes, Jeff. It doesn't matter if it's political. There's money to be made in this market.
That's a true statement. That is
the market's
a true
moving
statement.
up. This is going to benefit growth stocks. We're seeing huge move already in the semiconductors and some of these tech names I'm looking at right now. So yeah, there's money to be made.
And
so make that money.
G Money says that even with the cut, mortgage rates are still ridiculously high, but the financing becomes just a little bit better, just a little bit, and people are going to like Ryan said, people are going to look to save a buck. All right, those are all the news stories. Here's the market. I mean, look at that. We did give a lot of that back. Not a lot. We gave about half. It went up about halfway back down. Then we got another little bounce right here. So I do want to keep an eye on the market. Nice little level of support after it faded this gap, and now it's running back up. That
I think
makes
his commentary is going to be important.
Yeah, it is.
If he shows or spooks the markets with economic weakness, and they don't, people don't think we're going to get the soft landing scenario. This rally we're seeing could be short-lived, but definitely pay attention to how the market reacts to the comments.
I want to do something real quick. Ryan, so a question came up. Tell me how to make money. I'm going to look for stocks, price volume, capital appreciation, RV, greater than 1.2. Okay. I want to find, I really do. Stocks, price, split adjusted, less than value.
Okay.
That makes
Undervalued
sense.
stocks.
So I want to find undervalued growth stocks right now. All right. I don't even want to put earnings growth. Someone said
hit that run search button.
Yeah, I'm going to do that. Let's go see what's out there. Bob had to fix my computer again today. Let's make this bigger. So,
insurance stocks.
and Ryan did a great story on insurance stocks.
Those are the play. I mean, they're
Progressive, Heritage, Builders. So good question about what the flying flip is this? Good question about, tell me how to make money. These are stocks that I would keep on my radar. Undervalued stocks, upside potential, probably want to look at double-digit earnings. All of these have double-digit earnings growth. I think, what is it? M. Sharbeck, this is, if everybody out there, take a picture. This is just 10 stocks out of the over 9,000 stocks that we track. I think that this is a good, notice they're all buys, all CIs above one. How much time we got? Let's go look at this on a one-year graph. We're just going to go through these graphs. Now you understand why this list, that got beat up, and look at the rebound. Look at these stocks. Remember, out of 9,000 stocks, I made a simple search to find you some stocks to take a look at. Ryan, you agree with this list of stocks?
I do agree. I'm noticing a lot of these stocks are actually on the Russell 2000.
Okay.
And I was looking at it. The Russell right now is the winner.
Okay.
1.73% to the upside right now. The closest to it is the NASDAQ, and it's up 0.8%. So we've been talking about it. Interest rate cuts help growth stocks. I know Russell, gained a lot of attention. What was that, about a month or two ago when it had a big pop? A little lackluster since then, but I'm still of the belief that these interest rate cuts are going to help the Russell 2000 stocks. We're seeing it today. They're the big winner.
What's the difference between Google and Google and GOOGL? One is something and one is something else. I forgot. There's somebody.
Yeah, they divided it in like the two symbols.
Monica, someone in the room will tell you the difference because I don't remember off the top of my head. All right, let's go.
You know why Google spelled the way it is?
Why?
They misspelled it. Because Googleplex, like it's actually named after, is not spelled the way you see it. It's GOOGOL, I believe, instead of LE. But yeah, they misspelled it. And that's why we know Google the way it is.
Google is Class A. Google L is Class C. Thank you.
Okay.
All right. So let's go. I got some big mover fish for you. Just to have. These are stocks that are moving up today on good volume. Just keep these. Take a picture, whatever it is. Because we got to get through these. Current hot.
Probably could skip the contras today.
Yeah, I did. Hot industry stocks. I did walk you through how I find these stocks. Notice that all of these RVs are above 1, CIs are above 1, earnings growth. Again, another group of a group of stocks to take pictures of. Hot industries, top 10 industries. I cherry picked 5 stocks from those industries. Hot industry last week was 2 weeks ago.
What do I think about gold? I think interest rate cuts should help gold.
I don't like gold. I can't say that. It's not true.
I like it, but
2 weeks ago, I gave you hot industry picks. What did they do? Outperformed the market. 4 out of the 5 went up. All right.
Okay.
Sherwin-Williams was in it then. It's still in there now. All right. R&R is still in it now, too. Oh, no. Never mind. Glenn's picks last week.
This would have been 2 weeks ago.
Oh,
it's empty.
I got it empty. I'll talk about my picks real quick. 2 of these picks are going in the short portfolio. Guess what they are? Intel and Boeing. Intel and Boeing are going to my short portfolio.
I like it.
I have to determine which ones of these I want to put into my portfolio for this week. Right?
I mean, BlackRock's looking good. About 2% right now.
It is.
It is overvalued, but it's got the buy rating. You see momentum.
I'll
let you decide that.
I almost like Apple, and I'm not sure what I'm thinking about microsausage. But I'm thinking,
Glenn might be a little scared to buy stocks today.
Yeah, but I'm probably gonna put 1 or 2. All right, Ryan's picks last week. You got picks in there. Did you do this?
No, not last week. I didn't use your layout.
This was 2 weeks ago, right?
Mm-hmm.
Let's go take this back to the 4th. Quick test. I don't know what it's gonna do. It was bad.
UVXY, not good.
That's true. All right.
That was just remember I had a small position,
That's
like $400 in that as a hedge, just in case. We'll have to take a look at the portfolio, see how they've done.
Your picks. Why are you upset, Glenn? I don't want to. Who's upset? I'm not upset.
So these are the 2 insurance companies. Also had Google on the list. Glenn did not put that in there, but either one, Class A or Class C. But look, ARM up almost 3%. These insurance companies sorry, not insurance companies. I have insurance on my mind. Real estate companies up today, right? And no surprise with the interest rate cut here. All of these picks are up today, actually. And if you look at the valuation, CBRE is overvalued. But the other one I have is undervalued, Jones Lang. Alphabet, undervalued. I've already talked about that. Probably one of the best stocks to have on your radar on the NASDAQ 100 right now. And ARM, greatly overvalued again. That's my only concern with them right now. But 2 out of the 4 stocks do have buy ratings. If you look at growth rate and earnings, phenomenal ratings across the board here. So I think these stocks are primed for good. I'm actually going to add all of these to the watch list today.
You want all of these into your watch list?
Into the portfolio today.
All right. Add to portfolio. Ryan's pick.
What? Go to my holdings real quick. Well, I think I own ARM.
Excuse me. I don't think you do. Told you didn't.
No, it's gone now. Amazon. Well, hey. All right. Yeah. Let's add those stocks.
All right. Let me make this bigger. How much time? 7 minutes. Okay. Viewers, you want all 4 of these in your portfolio? Mm-hmm. Add to.
And we'll do full position, $1,000 a piece.
Oh boy, Ryan's the big boy today. He's doing big boy stuff today. Action.
Hey, I'm taking some notes from Jeff now. I'm trying to be like Jeff and buy something.
4,000.
Yep.
Next.
$1,000 each.
Open it up. Your portfolio's down 0.82. It's getting ready to add these. Oh, it may not. Oh, it did. There we go. So. Perfect. There you go. Amazon, it's already up 4%, a big winner he got there. TJ Maxx, he didn't. He got that. It's down a little bit. But overall, like the equity curve, is only down a little bit. All right. Let's go to my viewers. Glenn's picks. What do I want? I think I'm going to take.
Oh, he's scared.
Oh, whatever.
Glenn's scared.
I ain't never scared.
Go ahead and
I'm down
Bowie.
about 1. I'm in DraftKings, which was a good play. 13% is carrying my portfolio. Netflix, I'm still in it. Okay. Let's go back to viewers. What do I
We just
want?
started this, what, 2 weeks ago? It's pretty new.
Yeah. I'm going to take that. I'm going to take that.
When should I start taking money off the table for PLTR, Palantir?
Oh, I'm still in it.
Glenn's still in it?
Yep.
I wouldn't do it today with the market rallying.
Add to portfolio. I'm going with these two. Glenn's pick long. Full.
Yes, Victoria, 50 points. That's what they decided.
4,000.
We'll have to go back to the market timing graph after we're doing this.
All right. So I added 4 stocks to the portfolio.
Nice. Now me and Glenn have some stocks.
All right. But then.
Palantir currently at 36.
Look at that. Thank you, Jeff.
Thank you, Jeff.
Whoa. When did you change that?
I like the video. Oh, look at Glenn
Nice.
dancing. Oh,
I've never seen that. Oh, man. I like that. That was cool. Now every time you do a super
Jeff,
chat,
that was
type a
worth
W in the room.
$1.99.
Type a W in the room. That was
That
hotness.
video was worth it.
That was hotness. All right, now, guess what? We both have 2 portfolios, a long portfolio and a short portfolio. I am going with add the portfolio Intel and Boeing into my short picks. Next, action, short, spend $2,000. So I'm going to now activate my short portfolio as well. Open the portfolio now. I've got 2 stocks short. And at any time when Ryan's ready, he'll put his short picks in there as well. Mm-hmm. But this is, I think, prime for me. I think even with Intel and Amazon, the story, Intel is just poopy. It is just straight up poopy.
Just poopy. Well, at least you got sell-rated stocks in your portfolio.
Yep,
in
my short portfolio. More fish before we go to the conference. Top VST 3/8
You know
crossovers.
what we should do? Let's look at some bullish engulfing candlesticks.
We can do that.
Because that's really going to show you some confirmation.
What am I in? Well,
Unisearch.
I know what to do. Shut it up. I don't know if it's here. I don't think it's here. Do we have a candlestick one, don't we?
Yeah, there's a candlestick folder.
A, B, C.
Yeah, just a couple down below. Okay. Searches - candlesticks.
Searches - candlesticks. You said bullish engulfing?
Yep.
I think this Friday I do
candlesticks. Okay.
You sure you want to do a bullish candlestick? 3 months.
Bullish engulfing?
Unisearch.
I mean, the VectorVest Composite just gave us a bullish engulfing candlestick today.
All right, let's graph these all. We only got 2 minutes.
Let's see what we got. Well, that's a nice chart. Lower left to upper right. Just hit a brand new high.
That's not big enough.
It's in the insurance space, so that's hot.
Oh, candle's not.
Pretty weak.
That one looks better.
That looks a lot better.
AHR,
and that's a REIT, too. A REIT
yep.
should probably go up. I would imagine REITs be doing pretty well with the interest rate cut right
I would
now.
really like to see it take out that high, but I like that.
So close to it. Yeah, so there's a fish.
There's another good one.
There we go.
Insurance.
BWIN.
Rising earnings.
Insurance is hot right now. I was surprised it got so many views. It's not the coolest subject to talk about.
That's another one. Healthcare products. This is a great search that we have. I'm not feeling that one. The candle's not big enough for me. That's got plus who's trading that? I'm still in that.
Defense in there.
I'm still in there. Look at that.
Got a little bit of an upper wick today by defense stocks. I like it.
That probably was at one time today, but not now.
Not now. There you go. Look at that brand new high too.
Don't like the earnings. If I'm going to take the candlesticks personally, I like the combination of the rising earnings with it as well. That's just me. I'm not feeling that one. Maybe. All right. Let's go to
229. Let's do it. See what old Jerome Powell is going to bless us with today.
Can you put the thing up there before we get to going? We still have a special that's going on. Our end of summer educational sale, up to 70% off of a lot of our courses. You definitely, we extended it. There was a lot of great feedback from it. We extended it out to September 30th. Up to 70% on a lot of different courses within the VectorVest software. It's a great way, as Ryan says, to invest in yourself. And my way, my thinking is Nobody's going to invest your money like you do. All right?
That's
If
true.
you want to learn how to effectively do that from a powerful program like VectorVest, there it is. Is there a link?
We're still
www.
VectorVest.com/sale.
There you go. Check it out. Just check
And
it
I
out.
will say this, just because we're waiting on Jerome Powell, he's not on the booth yet. All this interesting candlesticks and technical analysis, we have really deep courses that cover this material. I know me and Glenn put out videos, give you introductions
Right.
of these theories and these tools to have. But if you want the full picture, more in-depth analysis, definitely check out those
All right,
courses.
somebody said he's talking. I'm all the way to the end. It's not showing you. We're probably on a delay somehow or another because we suck.
It's on CNBC.
I'm on CNBC. I'm looking at CNBC.
I'm pulling up YouTube now and just see.
Maybe we should have just done it from YouTube. Joey's looking. Same thing I had.
He's talking.
There he is.
He's talking.
All right.
Go to YouTube.
You bring
He's
that.
talking.
He's bringing it over.
All right, here we go.
My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Our economy is strong overall and has made significant progress toward our goals over the past 2 years. The labor market has cooled from its former
Max out that window.
state.
You're loud.
Inflation has eased substantially from
Yeah.
a peak of 7%
That's-
to an estimated 2.2% as of August. We're committed to maintaining our economy's strength by supporting maximum employment and returning inflation to our 2% goal. Today, the Federal Open Market Committee decided to reduce the degree of policy restraint by lowering our policy interest rate by a half percentage point. This decision reflects our growing confidence that with an appropriate recalibration of our policy stance, strength in the labor market can be maintained in a context of moderate growth and inflation moving sustainably down to 2%. We also decided to continue to reduce our securities holdings.
He's been saying that forever.
I will have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand.
No volume. Low volume.
Because you're loud. I got it turned up. But if I turn it up more on my side, you can't talk because you're going to blow my ears
point
out.
to a roughly similar
Right.
pace of growth this quarter. Growth of consumer spending has remained resilient, and investment in equipment and intangibles has picked up from its anemic pace last year. In the housing sector, investment fell back in the second quarter after rising strongly in the first. Improving supply conditions have supported resilient demand and the strong performance of the U.S. economy over the past year. In our summary of economic projections, committee participants generally expect GDP growth to remain solid, with a median projection of 2% over the next few years. In the labor market, conditions have continued to cool. Payroll job gains averaged 116,000 per month over the past 3 months, a
And-
notable
and
step
we
down
lost
from the pace
almost
seen
a million
earlier
jobs.
in the year. The unemployment rate has moved up but remains low at
Tilo says dishonest
You
if all
can't
is well.
talk.
Nominal wage
You're
growth has
loud.
eased over the past year, and the jobs-to-workers gap has narrowed.
Ryan, you have to
Overall,
whisper.
a broad set of indicators suggests that conditions in the labor market are now less tight than just before the pandemic in 2019. The labor market is not a source of elevated inflationary pressures. The median projection for the unemployment rate in the SEP is 4.4% at the end of this year, 0.4 higher than projected in June. Inflation has eased notably over the past 2 years, but remains above our longer-run goal of 2%. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.2% over the 12 months ending in August, and that excluding the volatile food and energy categories, core PCE prices rose 2.7%.
Joey has got the volume
Longer-term
turned all the way
inflation
up.
expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The median projection in the SEP for total PCE inflation is 2.3% this year and 2.1% next year, somewhat lower than projected in June. Thereafter, the median projection is 2%. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. For much of the past 3 years, inflation ran well above our 2% goal, and labor market conditions were extremely tight. Our primary focus had been on bringing down inflation, and appropriately so. We are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. Our restrictive monetary policy has helped restore the balance between aggregate supply and demand, easing inflationary pressures and ensuring that inflation expectations remain well anchored.
He's talking about trying to have a
Our
soft
patient
landing.
approach over the past year has paid dividends. Inflation is now much closer to our objective, and we have gained greater confidence that inflation is moving sustainably toward 2%. As inflation has declined and the labor market has cooled, the upside risks to inflation have diminished and the downside risks to employment have increased. We now see the risks to achieving our employment and inflation goals as roughly in balance. And we are attentive to the risks to both sides of our dual mandate.
No politics.
In light of the progress on inflation and the balance of risks, at today's
bars
meeting,
down.
the committee decided to lower the
One
target
bar.
range for the federal funds rate by a 0.5 percentage point to 4.75% to 5%.
Yes, you did, Jeff.
This recalibration of our policy stance will
Thank you
help
for
maintain the
apologizing
strength of
to
the
Claire.
economy and the labor market, and will continue to enable further progress on inflation as we begin the process of moving toward a more neutral stance. We are not on any preset course.
No
We
preset.
will continue
course.
to make our decisions meeting by meeting.
Oh boy.
We know that reducing policy restraint too quickly could hinder progress on inflation. At the same time, reducing restraint too slowly could unduly weaken economic activity and employment. In considering additional adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. If the economy evolves as expected, the median participant projects that the appropriate level of the federal funds rate will be 4.4% at the end of this year and 3.4% at the end of 2025.
What's the rate
These
cut on
median projections are lower than in June, consistent with the projections for lower inflation and higher unemployment, as well as the changed balance of risks. These projections, however, are not a committee plan or decision. As the economy evolves, monetary policy will adjust in order to best promote our maximum employment and price stability goals. If the economy remains solid and inflation persists, we can dial back policy restraint more slowly. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we are prepared to respond.
that? Inflation's not
Policy
going to
is
fall.
well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. The Fed has been assigned two goals for monetary policy: maximum employment and stable
And
prices.
stable price. That's,
We remain
yeah,
committed
both.
to supporting maximum employment, bringing inflation back down to our 2% goal, and keeping longer-term inflation
We're
expectations
never going to get to 2.
well anchored. Our success in delivering
Yes, we're
on
more. I
this
see the Russell.
matters to all
Russell's
of us.
moving.
You can't talk.
We understand.
No,
that
because
our
you're
actions
super
affect
loud. We got the
communities,
volume turned up
families,
way
and
loud.
businesses
Well, whisper,
across the
whisper.
country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals.
All right, we're looking at a
Thank
new
you. I look forward to
intraday
your
high,
questions.
possibly. All right, he's done talking.
Steve Leisman, CNBC. Thank you, Mr. Chairman, for taking
How
my
does he
questions.
get the first
In
question?
July, you
Oh,
said you weren't
because it's
necessarily
CNBC?
thinking about a 50. You didn't want to be specific, but you said you weren't thinking about a 50.
Lynn's
The
jealous.
inflation data last week
Ryan,
came out a
you
little
are
firmer
super
than expected.
loud.
Retail was strong, third-quarter GDP running 3%. So what
You're
changed
like
that
my
made the committee
5-year-old.
go 50, and how do you respond to the concerns that perhaps it shows the Fed is more concerned about the labor market? And I guess should we expect more 50s in the months ahead? And based on what should we make that call? Thank you.
Okay, more 50s maybe.
So, okay, a lot of questions there. Let me jump in.
Question.
So,
Stop.
since the last
He
meeting,
doesn't realize
okay,
how
the last
loud he
meeting,
is.
we have had a lot of.
I'm
data.
gonna come in and
We've had
pop
two
you.
employment reports, July and August. We've also had two inflation reports, including one that came in during blackout. We had the QCEW report, which suggests that maybe
Shut up,
not maybe,
Ryan.
it suggests that the payroll report numbers that we're getting may be artificially high and will be revised down. You know that. We've also seen anecdotal data like the Beige Book. So we took all of those and we went into blackout and we thought about what to do, and we concluded that this was the right thing for the economy, for the people that we serve, and that's how we made our decision. So that's one question. What was the second and third?
How do we make sorry, thank you, sir. How do we figure out in the months ahead, is there another 25 or 50 coming in? Based on what shall we make that call? Thank you.
Sure. So a couple things. A good place to start is the SEP, but let me start with what I said, which was that we're going to be making decisions meeting by meeting based on the incoming data, the evolving outlook, the balance of risks. If you look at the SEP, you'll see that it's a process of recalibrating our policy stance away from where we had it a year ago when inflation was high and unemployment low, to a place that's more appropriate given where we are now and where we expect to be. And that process will take place over time. There's nothing in the SEP that suggests the committee is in a rush to get this done. This process evolves over time. Of course, that's a projection. That's a baseline projection. We know, as I mentioned in my remarks, that the actual things that we do will depend on the way the economy evolves. We can go quicker if that's appropriate. We can go slower if that's appropriate. We can pause if that's appropriate. But that's what we were contemplating. Again, I would point you to the SEP as just an assessment of where of what the committee is thinking today, what the individual members, rather, of the committee are thinking today, assuming that their particular forecasts are realized.
Market's still moving up after the 2 o'clock hour.
Hi, Chris Rugaber at Associated Press. Thank you. The projections show that the Fed officials expect the Fed funds rate to still be above their estimate of long-run neutral by the end of next year. So does that suggest you see rates as restrictive for that entire period? Does that threaten the weakening of the job market that you said you'd like to avoid? Or does it suggest that maybe people see the short-run neutral as a little bit higher than Thank you.
I think the way I would really characterize it is this. I think people write down their estimate, individuals do. I think every single person on the committee, if you ask them what's your level of certainty around that, they would say there's a wide range where that could fall. So I think we don't know. There are model-based approaches and empirically based approaches that estimate what the neutral rate will be at any given time. But realistically, we know it by its works. So that leaves us in a place where we expect, in the base case, to be continuing to remove restriction, and we'll be looking at the way the economy reacts to that, and that'll be guiding us in our thinking about the question that we're asking at every meeting, which is our policy stance the appropriate one? We know, if you go back, we know that the policy stance we adopted in July of 2023 came at a time when unemployment was 3.5% and inflation was 4.2%. Today, unemployment is up to 4.2%. Inflation's down to a few tenths above 2. So we know that it is time to recalibrate our policy to something that is more appropriate given the progress on inflation and on employment moving to a more sustainable level. So the balance of risks are now even. And this is the beginning of that process. I mentioned the direction of which is toward a sense of neutral. And we'll move as fast or as slow as we think is appropriate in real time. But what you have is our individual accumulation of individual estimates of what that will be in the base case.
I still think that the Fed knows something about
Howard
the
Schneider with
economy that we
Reuters.
don't know. I really
How
do.
close was this in terms of the decision? You do have the first dissent by a governor since 2005, I think. Was the weight clearly in favor of a 50, or was this a very close decision?
I think we had a good discussion. If you go back, I talked about this at Jackson Hole, but I didn't address the question of the size of the cut, left it open, and I think we left it open going into blackout. And so there was a lot of discussion back and forth, good diversity of division, excellent discussion today. I think there was also broad support for the decision that the committee voted on. So, I would add, though, look at the SEP. All 19 of the participants wrote down multiple cuts this year. All 19. That's a big change from June, right? 7 of them wrote down 3 or more, 17 of the 19 wrote down 3 or more cuts, and 10 of the 19 wrote down 4 or more cuts. So, there is a dissent, and there's a range of views, but there's actually a lot of common ground as well.
Ryan is right on point. Look at the big wick on today's end-of-day candle.
Can you give us some guidance as sort of
Ryan, you can talk, but you really have to whisper.
Would you
I'm just
expect
telling you
this
that.
to be running every other meeting once we get into next year? For
Yeah,
example,
we're going to take it meeting by meeting. As I mentioned, there's no sense that the committee feels it's in a rush to do this. We made a good, strong start to this, and that's really, frankly, a sign of our confidence. Confidence that inflation is coming down toward 2% on a sustainable basis. That gives us the ability. We can, make a good, strong start. But and I'm very pleased that we did. To me, the logic of this, both from an economic standpoint and also from a risk management standpoint, was clear. But I think we're going to go carefully, meeting by meeting, and make our decisions as we go.
Tilu is right. That doesn't sound very confident. All right.
Chair Powell, Gina Smilik.
Do we still want to keep watching? Type of 1.
You and your
if
colleagues
not,
in
type
your
of 2.
economic projections today see the unemployment rate climbing to 4.4% and staying there. Obviously, historically, when the unemployment rate climbs that much over a relatively short period of time, it doesn't typically just stop. It continues increasing. And so I wonder if you can walk us through why you see the labor market stabilizing, sort of what's the mechanism there, and what do you see as the risks?
So, again, the labor market is actually in solid condition. And our intention with our policy move today is to keep it there. You can say that about the whole economy. The U.S. economy is in good shape. It's growing.
So why
at a solid
cut?
pace. Inflation is coming down. The labor market is in a strong pace. We want to keep it there.
The economy is in a
That's what
good
we're
place,
doing.
but I'm going to cut anyway. That's like silly. He just said it. The economy is in a good place.
Tim Rose of the Wall Street Journal. Chair Powell, does today's action constitute a catch-up in action given recent substantial revisions to the employment data? Or is this larger than typical rate cut a function of the elevated nominal level of the policy rate such that an accelerated cadence could be expected to continue?
Okay. Multiple questions there. So I would say we don't think we're behind. We do not think we think this is timely. But I think you can take this as a sign of our commitment not to get behind. So it's a strong.
That doesn't make sense
your
either.
Other question was.
Well, is this about what happened in the employment data
Why do we
between
think?
this meeting and the last meeting, or is this about the level of the funds rate, the high nominal level of the funds rate relative to what might be expected if you're trying to maintain equilibrium?
So I think it's about we come into this with a policy position that was put in place, as you know, I mentioned in July of 2023, which was a time
By
of high
way of
inflation
the
and very low unemployment.
Survey.
We've been very
you guys
patient
still want to watch.
about
That's fine.
about reducing the policy rate. We've waited. Other central banks around the world have cut many of them several times. We've waited, and I think that patience has really paid dividends in the form of our confidence that inflation is moving sustainably down to 2%. So I think that is what enables us to take this strong move today. I do not think that anyone should look at this and say, oh, this is the new pace. You have to think about it in terms of the base case. Of course,
Jeff, I'm
what
watching.
happens will
Here's
happen.
the buy-to-sell ratio.
In the base case, what you see is
Breaking
look at
a
the SEP.
downtrend.
You see cuts moving along. The sense of this is we're recalibrating
That's a
policy
VectorVest
down
indicator
over
right there,
time
folks.
to
More stocks
a
are
more
becoming
neutral
buy
level.
recommendation in this
And
most
we're
recent
moving
rally.
at the pace
That's a bullish
that
sign.
we think is appropriate given developments in the
Ryan,
economy
you
in the
can
base
whisper.
case. The economy can develop in a way that would cause us to go faster or slower.
I'm
but that's what the
gonna
base
come
case
over there
is.
and hit you.
And if I could follow up on the balance sheet. In 2019, when you did the mid-cycle adjustment, you ceased the balance sheet runoff.
Dartboard
with the larger cut
time.
Today, should there be any signaling forward about how the committee would approach
But Jeff is right on point. Look at that. Buy-to-sell
policy.
ratio broke to a downtrend.
In the current situation, reserves have really been stable. They haven't come down. So reserves are still abundant and expected to remain so for some time. As you know, the shrinkage in our balance sheet has really come out of the overnight RRP. So
John,
I think what that
you make
tells
a great
is
point.
We're not thinking about stopping runoff because of this at all. We know that these two things can happen side by side. In
I
a
agree,
sense, they're
but
both
he
a
said
form
it
of
with his own mouth.
normalization. And so
The
for
economy
a time,
is good.
you can have the balance sheet
economy
shrinking,
is
but also
strong.
be cutting rates.
Yet he makes a 50 basis point cut.
Glenn,
Thank you.
isn't that
Heather
a
Smith with the Financial
That's not a
Times?
whisper.
Just following up on Gina's question on rising unemployment. Is it your view that this is just a function of a normalizing labor market amid increased supply, or is there anything to suggest that something more concerning perhaps is taking place here, given that other metrics of labor demand have softened too? And I guess in your direct follow-up to Gina is, why should we not expect a further deterioration in labor market conditions if policy is still restrictive?
So I think what we're seeing is clearly labor market conditions have cooled off by any measure, as I talked about in Jackson Hole. And but they're still at a level.
There's the
level of those
intraday
conditions
graph,
is
1
actually
minute
pretty
bars.
close to what I would call maximum employment.
That's end of day
So
graph.
you're close to mandate, maybe at mandate on that.
stop it,
So what's
Victoria?
driving it? Clearly, payroll job creation has moved down over the last few months, and this bears watching. Meant by many other measures, the labor market has returned to or below 2019 levels, which was a very good, strong labor
All
market.
right,
But
we
this is more
we
sort of
we got 9 minutes
2018.
left. We're
So
gonna shut the Fed
labor market
down.
bears close.
Now Ryan can talk. Don't talk yet. Let me turn my speakers down. All right, now you can say something. Say something.
Hey, Glenn.
Stop whispering. All right. So now the interesting question that Akshaya asks is, what do we do? All right. I am not going to sit here and blow smoke where it don't belong. I'm gonna let the VectorVest software talk. This is where we don't have to listen to the talking heads on TV. This is where we look at the power of the program that many of you are actual subscribers to. Okay? Right here, I'm looking at a 3-month graph of the VectorVest composite. We just broke through 2 levels of resistance over the last week. Okay? Level of resistance here, level of resistance here, now both serving as a level of support. Here's the buy to sell ratio as an indicator that looks at the amount of stocks that have become buy recommendations in this last wave up. More stocks are becoming buy recommendations, taking advantage of the current rally in the market as we broke through resistance. The MTI is the underlying trend of the market. And that's cast on a scale between 0 and 2. Above 1, the underlying trend of the market is up. So I'm going to put on timing signal primary wave. Primary wave has been up, coming right off this level of support, right off this level of a bottom. We've been in a primary wave up since 9/12 of 2024. Couple that with now the rate cut, couple that also with the buy-to-sell ratio breaking through a downtrend, the MTI breaking through a downtrend, both of them are on the rise. The answer to your question is right now, I'd be bullish in the market. Let's go to the homepage. Let's go to the color guard. What do you see? So for everybody, go ahead, Ryan. I'm sorry.
I said green lights. That's what we see.
All of the market.
Let's not overthink it, Glenn.
Absolutely. So looking at the market timing graph, looking at the direction, looking at the VectorVest indicators, neither Ryan or I are giving personal insight. We're looking at the power of the VectorVest software. Now, David is right. 8 days up in a row, should pull back some. I'm okay with that. But overall, David, what am I looking at? A lot more green light in the color guard. The guidance on the color guard says VectorVest advocates buying safe undervalued stocks that are rising in price at this time. Today, all of the major indices are up. Anything can change between today and tomorrow. But we've got 3 green lights, MTI above 1, buy-to-sell ratio on the rise, the biggest number over the last 6 trading days. Primary wave is up. Underlying trend of the market is up. Confirmed call is up. The DEW is up.
Mm-hmm.
All I'm letting you know is that you take advantage of the direction that the market is giving you. That doesn't mean that you just go full bore and just buy everything and just throw caution to the wind. You will still have stops in place. I don't care how good a stock is. You should always have good stops in place.
And just focus where the money's going. Right now, the Russell's leading the charge. Last time we talked it was around 1.5%. Right now, it's at 2.43% to the upside. And behind that, it's going to be the NASDAQ Composite at 0.73%. So tonight's video, like I said, I'm going to record it after this presentation. Definitely going to be looking at the Russell 2000. Might throw in some NASDAQ stocks just because it's moving as well.
And you know, Ryan did a great job talking about the power of the VectorVest software, just looking at the fastest moving industries. And he wasn't whistling Dixie when he started talking about just how strong the insurance industry was. It's the number one industry in the software.
And up again today.
Building, mobile, manufacturing, RV. Number two, building. Look, 1, 2, 3 building, 4 building industries.
And look at the top ETF, real estate.
I mean, if everyone is looking, and you are looking for places to go outside of what everybody and their mama is talking about, looking at the top industries sorted and ranked 1 all the way to 222, I don't know how much easier we can make it. Ryan's video, all about insurance. He walked you through what to look for. I'm going to take a different take on it. I'm going to look at, for me, damn it. I hate that he had to fix this.
I don't think you can cuss on the live stream.
I didn't freaking cuss. All right. As you look through this, I love looking at CI, looking at the stocks that go up more than they go down, the double-digit earnings growth. Let's go to building, manufacturing, RV. Do the same thing. Why not look at the stocks, again, by way of our indicators? This is not anything that Ryan says, nothing that I say. This is using, and if you're not a subscriber to the VectorVest software, you can go to www.vectorvest.com/YT, take out a trial for $9.95. If you are not a subscriber, you want to be able to get access to what I'm showing you right now. There's no magic.
That's it.
There's no magic behind what I'm showing you. But sort this list. Look at the one. Here it is. PATK has got a CI at 1.52.
You love Camping World. You talked about that before.
I do, because
And it's still moving up.
Janet and I are going to get us an RV when I retire.
RT 1.72. Hey, we need to go make a RV video.
Yes, we do.
RVs.
All right, but folks,
Space is hot right now.
for everyone who's out there asking the questions about, hey, what to do, stop asking the question. If you have a software, I'm telling you where to go. If you don't have the software and you'd like to take advantage of it, www.vectorvest.com/YT. Take a trial. $9.95 for 30 days. Take a trial. Everything that I'm walking you through is what you actually see right in the software.
And tonight's video, I'm pretty much going to coin it the interest rate cut playbook.
There you go. I like that. The interest
I'm use
rate
that as the
playbook.
title. Like I said, I'm going to look through some stocks right after this live stream. Right now with the momentum, I'm looking at the NASDAQ 100 and Russell 2000 in particular. But I think I'm going to do about 10 stocks this evening. Just go through the VectorVest 7 software, see how we go into the close. But it looks like the market's still rallying right now. So no big concerns at this moment. That being said, I'm on the board with everybody else. Let's not overthink it. We see green lights. Let's celebrate. Let's find some good stocks, make some money.
But that's why having stops is going to be so important. Mm-hmm. Anything can happen tomorrow. So I don't want to leave none of you out there, hang you out to dry.
And we saw Glenn's great diagram of all the years of interest rate cuts. And historically, within what was the first month or first 3 months was down like 1%.
That was historically over all those years.
Yeah,
historically
1.1%.
That's on average.
So just know historically, you're taking a little bit more risk these first 3 months playing the market, right?
Okay.
We noticed just historically, usually 6 months towards the end of the cycle, that's when the market really starts to take off historically, just because essentially by the end of the rate cycle, the economy should have been fixed,
right?
Or be better. That's the whole point of ending a rate cut cycle, right? And it makes sense. So just logically think it, just know if you're buying today, a little bit of risk, just historically look out for that, have stops in place. But looks like, about 6 months from now, going into 2025, we should have some great opportunities for us.
And I want you to be aware that the current break above this level of resistance, the market may tomorrow come back and test that level. The level on the composite sitting at $69.55. Do not be surprised, even if we have follow through tomorrow, if we come back and test that level of support. I'm not telling you that to panic. I'm telling you that to help you make good decisions. All right?
And yeah, Pennywise Utilities, that's also a great.
What is Reef Dream? I don't even know what that is. Deborah? Reef Dream, you don't have. I don't even know what it is. Is this something I got to go see the doctor about? Sorry, Mr. Tompkins, you have Reef Dream. I don't know what Reef Dream is.
Are you gonna cry just like that in the office? Whee!
I never cry like that. Marines don't cry. Marines don't cry. I don't know what Reef Dream is.
Marines don't cry.
Because we don't.
I know.
All right.
That's right.
All right, do you think Dollar General is a good bottom fish? I'll look at that stock real quick.
Let's take a look at Dollar General. Because we is out of time. I got to make a video for you.
Yeah, that's right. Ryan said he had to be done.
I want stock picks. That's what I'm about to go do right after this video.
Not yet. Not yet. I'm looking at. It's got to fade the gap.
I want to get into that gap fill.
Yeah, I want to fade
it. Too crazy.
Yeah. All right, Joey, put us on the last screen. We're done. I know Ryan had to go, and I'm sorry, Ryan. We're at 3:01.
No, you're fine.
Hopefully, you guys got something out of the Fed's talk today and what he said. We saw the market react. I'm letting you know to be careful. The market could still follow through tomorrow, but may test that level of support, which is we just broke through his resistance. Just keep that in mind. We pointed you in the direction of looking at good undervalued stocks. Growth stocks should have a good way to go if the market continues higher. And then I showed you, just like Ryan did, looking at the top industries and sifting through there to find some stocks. So there you go.
And as far as the major indices right now, going at just after 3 p.m., Dow Jones and S&P have turned negative.
Okay.
NASDAQ struggling to hold ground right now, and the Russell 2000 still up. It's the winner, 1.67%.
All right, so
we are going to see a lot of upper wicks today. So again, just be careful, but tonight's video is going to be Russell 2000 and NASDAQ stocks.
But like Ryan said, don't overthink it. We got the green.
Don't overthink it.
Before you get into a stock, analyze it. Look at the graph before you pull the trigger. All right, we got to go. Ryan, I'll sign us off for today. Adios, arrivederci, ciao, au revoir, sayonara, aloha to all my peeps in Hawaii. Praying for peeps all over the world because we got to uplift and watch after each other. We'll make a better society if we do. Bom dia, Sugarfoot. Bye. That's the rest of it. See ya.